Hello everyone, my name is Anjani Kumar Khetan. I'm based out of Bangalore, and in this video, we will continue our deliberation on the targeted improvements which are on the anvil when it comes to the requirement for provisioning under IFRS, that is IAS 37, and eventually at some point in time, those will also be brought into or likely to be brought into the Ind AS framework as well. Now, just to quickly recap some of the proposed areas of the amendment to IAS 37, this slide is something which I already dealt with in the previous video, wherein we already talked about that the proposed amendment to IAS 37 essentially talks about these four areas of possible improvements and amendments. The first one is how to determine the present obligation does exist in a particular case and what is the point in time when the provision need to be recognized. That is one. Then, having determined that yes, provision is required, what elements of the cost need to be included while measuring the provision. This is another area of guidance which the proposed amendment to IAS 37 gives. And then, in situations when you have long-term provisions, which requires discounting, which is also there in the existing standards, IAS 37 and Ind AS 37, what discount rate should be used for discounting such long-term provision, because the existing literature does not give detailed guidance in terms of the discount rate to be used for discounting long-term provisions. So that is also an area of discussion as part of amendment to IAS 37, which is proposed. And the fourth element of the proposed amendment is specific guidance, which is dealing with the threshold-based applications. Now, these are the four broad categories of the areas which are dealt with by the proposed amendments. In today's video, we will focus only on the first element, which is this, that how an entity determines that there is a present obligation in a particular case and what is the point in time when the provision is recognized. Now, we will cover the other three aspects, which is these three, in subsequent part of this video series, just to ensure that the video doesn't become too long. So with that background, as I said, we will be covering the first portion today. So let us first look at what are the additional guidance and clarifications which are given under the proposed amendment to IAS 37. What does it say when the present obligation is considered to be existing and when provision need to be recognized. Now, to bring continuity and to better appreciate the changes, I have also brought in this particular chart, which I dealt with in the previous video last week. Now, the current requirement under IAS 37 and Ind AS 37 requires that to make a provision, these three conditions should be cumulatively satisfied. These are cumulative end conditions. However, the amendment or the proposed amendment to IAS 37 gives additional guidance to this criteria 1 under the existing standard. The other two criteria which are currently there in the standards, they are relatively immune and not being touched by the proposed amendments. The majority of the changes or the additional guidances are coming in the realm of criteria 1 related to this, whether the present obligation exists and what is the point in time when the provision need to be recognized. So let us see, in lieu of this, what is it that is being contemplated under the proposed amendment. So the proposed amendment brings in 3 new tests. So after the proposed amendment, when you evaluate this criteria 1, you have to actually look at these 3 new tests which need to be applied in lieu of the existing criteria number 1. We will look at each of these 3 tests, what they are. briefly on this slide, and then we will deep dive into each of these tests in subsequent video later today. So the first test out of the three is something called as obligation test. So under the proposed amendment to IAS 37, this obligation test is a newly introduced test. One of the three tests is obligation test. And in this test, an entity really need to assess that whether it has an obligation. And we will deep dive into this, each of these tests, as I said, in the subsequent slide. But to give a brief prelude of this obligation test, you need to check whether you have an obligation. And the second test is what is known as transfer test. So under this newly introduced test number 2, an entity need to ascertain whether the obligation, which we are saying in test 1, that whether I have an obligation. If I do have, then whether that obligation requires me to transfer an economic resource. And that's why this is the transfer test. Because I'm trying to assess that, okay, for this obligation which I have, which I established under the new test number 1, do I need to transfer any economic resource on account of the obligation which I have? If I say answer to the first question is yes, answer to the second question is yes, then I need to ask the third and the last question, which is also known as past event test. So under this test, the entity need to assess that is a present obligation which I have, this obligation which I have, is it originating on account of a past event? Right? So a collective answer to all these questions is, if it is yes, 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 then in that scenario, this test, which is being replaced by the 3 test, the new test, will say that yes, you have an obligation. And we will deep dive into it. Also, as I mentioned, under the proposed amendment, these 2 criteria, this is what is mentioned here, existing criteria number 2 and 3, which is, it is probable that outflow of economic resources is going to happen and the reliable estimate can be made. These 2 are generally not impacted by the proposed amendment to IAS 37. So this is the one which is going to be impacted, and this criteria will be replaced by the 3 new tests: obligation test, transfer test, and past event test. Now, each of these tests is something which we will look at in greater detail. What questions one need to ask when you are evaluating and getting answer on these tests? What specific questions you need to ask to get an answer to this is something which we will look at with relevant examples as well. So let us look at the first one, test number 1, the new test 1, which is obligation test. So for simplicity, I have brought in what we saw in the previous slide. I have brought in this chart. So we are now looking at this obligation test. That is, here the entity is assessing whether it has an obligation. So to get answer to this particular test, one need to ask basically 3 fundamental questions, which is being listed here. The first question to get answer to this question is whether there exists a mechanism which imposes a responsibility on the entity if the entity takes some specific economic benefit or takes some actions. Now, this mechanism could be legal or constructive. So, for example, if you are, let us say, in a pollution or let's say an industry which is creating a lot of pollution, say, for example, chemical industry. Now, is there a law which casts responsibility onto you that if you are polluting, you have an obligation to clean up the environment? That is something which is being referenced here is as a mechanism. So one need to assess whether there is a mechanism which imposes a responsibility on the entity. That is one. Secondly, as I said, the mechanism could be legal or constructive. Now, the second question which you need to ask to get answer to this question is whether the entity owes that responsibility. I have a mechanism which creates a responsibility. Now, whether that responsibility is I as an entity is owing to some other party. Right? That other party could be an individual, it could be your any other entity or society at large. That's what if you see here. That this another party could be a person or some other entity or a society at large. And in fact, the clarification goes on to explain that when we talk about other entity, that entity need not be, the entity who is making the provision, that entity need not know the identity of the party to whom the responsibility is owed, because that could be even society at large. It need not be a specific individual. Right? So this is test number 2 to get answer to this particular question. And the third question which you have to ask is whether the entity has no practical ability to avoid the responsibility. So essentially, what these obligation tests asks you is to assess is that, okay, there is a formal mechanism, either legal or constructive, which creates a responsibility onto me. Because of that responsibility, I owe that responsibility to some other party, which need not be an identified party. It could be society at large. And that responsibility is such that I can't move away from that, and I have no practical ability to avoid the responsibility. But that means tomorrow, if any of these three parties, which is a person, other entity, or society, if I do not meet my responsibility, they can hold me responsible, and in that case, I have to discharge my obligation. So I have no practical ability to avoid the responsibility. If these three criteria or these three question answer is yes, yes, and yes, then in that case, it is deemed that this particular test, the obligation test criteria, is met under the proposed amendment. So, in summary, to get an answer to the obligation test that yes, an obligation exists, ask these three questions, and answer to all these three questions should be yes, yes, and yes. And if that be the case, you have an obligation, you have met this obligation test. Part 1 out of the 3 test, which has been newly introduced by the amendment to IAS 37. Now, each of these are being illustrated also in the next few slides. I have already alluded to it, but let us look at some of the examples which will explain to you the 3 questions which we discussed in the previous slide. A mechanism. The mechanism could be, I have already told you, legal or constructive. So, for example, let's say if an airline company is required by law to overhaul its aircraft or the fleet of aircraft once every 3 years. Now, this clearly is, there is a mechanism here. There is a legal mechanism because the law requires you that every 3 years you have to do overhaul to the fleet of aircrafts. So yes, in this case, obligation test is met. But let's contrast it with another scenario that if you have an airline, that airline company needs to overhaul its aircraft once in 3 years. However, it is for technical reasons, but no legal requirement to overhaul exists. So here, neither there is a legal obligation nor there is a constructive obligation. This is purely on account of technical, business, commercial reasons. And therefore, if you look at the test, in this particular case, obligation test is not met because this requirement is not triggered by law or any constructive obligation. It is purely the technical, commercial, business reasons. So therefore, this obligation test in this circumstances is not met. Now, the second question which we asked in the previous slide is whether you entity owe responsibility to another party. Let's see an example of this. So an entity operates an offshore oil field where the law requires, again here, the law requires to remove the oil rig at the end of the production and restore the seabed. Then here, clearly, The moment you have started operating this oil field, you owe a responsibility because of the law. And therefore, in this case also, obligation test criteria of this question is met. But if you compare and contrast this on the right hand side with another requirement, let's say if an entity has a furnace. Now this furnace lining needs to be changed or replaced every 5 years. The responsibility is not owed. The responsibility for changing the lining, if they are not owed to any other party, the entity replaces the furnace lining purely for its own benefit. Here also, just like this particular case, it is for business commercial reasons. There is no obligation which is there to any third party. No other party can hold you responsible. It is you, internally you want as an entity to make these replacement of these furnace lining. Therefore, in this second example also, obligation test is not met when it comes to replacing the internal basically lining of the furnace concerned. Then the third question, which we saw in the previous slide, was whether entity has no practical ability to avoid responsibility. We will see this particular example in the next slide. Let's go to the next slide and try to see examples of how one need to look at whether the entity has no practical ability to avoid responsibility. So let us see this example. An entity which is operating a chemical industry has no legal obligation. You are in a chemical industry. You are polluting the environment. But consider for this particular example that you have no legal obligation to treat the contaminated water used in the production process before discharging it, let us say, in another source of water, say a river. Now, in this case, there is no such law in entity's jurisdiction, and therefore there is no legal obligation. However, in this case, there is a constructive obligation because the entity has a published policy, and because of that policy, it treats the water contaminated in the production process. Historically, it has been treating these contamination in the water. The entity is known to adhere to this policy in the past. So there is a constructive obligation which raises valid expectations in the mind of those affected that yes, if the entity has a published policy, tomorrow if the entity creates some contamination, it is expected that they will be able to correct that scenario. The entity has a pattern of past practice which creates a valid expectations in society at large that the water contaminated in the production process would be treated by the entity before it is actually discharged into the larger water body. Therefore, the entity in this case, because of the constructive obligation, because of its past action, in this case, the entity does not have a practical ability to avoid its obligation, and therefore in this example, obligation test will be met. Now, if we compare and contrast this on the right hand side with another scenario, wherein, let us say, similar example, the entity operating in chemical industry has production facilities in various countries, multiple jurisdictions. The entity has a practice of treating contaminated water only when there is a legal requirement in a particular jurisdiction to do so. So, for example, if this company is operating in 3 different jurisdictions and in 2 jurisdictions there is no legal requirement to treat the contaminated water, but in one of the countries it is, then historically the entity is only doing the cleanup work only in first jurisdiction. In the other 2 jurisdictions, they are not doing. So if that be the scenario, let us assume that as at the beginning of April 20X1, the entity's board of directors decides that they want to change the policy and they want to adopt a policy to treat contaminated water in all facilities, irrespective of whether there is a legal requirement for it or not, which is a departure from the current practice. Current practice is only when there is a legal requirement. Now the board of directors intend to do a change and they want to now extend the scope of the policy, and water contamination should, in this case, as of April 20X1, they are deciding they want to adopt as of, they want to change the policy, enlarge the scope. However, though they have met here, the directors have met here, this decision is not published or communicated internally or externally, even up to the next financial year. The board of directors met and tried to get increase in the scope as on April 20X1. Come next year, March 20X2. By that time, this decision of the board has not been communicated either internally or externally. Clearly, in this case, there is no constructive obligation or legal obligation. The entity does not have, in this case, a past practice, and therefore, in this case, this obligation test is not met. So that is how the proposed amendment to IAS 37 wants you to evaluate this first newly introduced test, obligation test. So basically, obligation test will require you to assess the three questions which we saw one by one with relevant examples. With that said, now let us move to evaluating the second test, that whether the obligation require the entity to transfer an economic resource. Let us see this test number 2 in the subsequent section of our discussion. So second test which have been newly introduced is called transfer test. Again, for simplicity, I have brought in the chart where we are talking about the transfer test. Now, to evaluate this particular test, whether the obligation requires an entity to transfer economic resource, basically entity need to ask these two questions. We'll see one by one what are these two questions. The first question is whether the obligation which you have determined in step 1 has the potential to require the entity to transfer an economic resource. Now, hear this very carefully. In this test, what you are trying to assess is that the obligation which you have determined in step 1, that obligation has a potential that if that obligation gets triggered, then potentially you will require to transfer an economic resource. And if that happens, the second question which you need to assess for this question is whether the transfer of the economic resource is to another entity. So if I am the entity, if my obligation gets triggered, will I need to pay or this obligation to another entity? And as I've already told you that this another entity could be a person, other entity, or society at large. This entity need not exactly know the identity of the counterparty to whom the responsibility will lie. It can be even society at large. Okay, so this is the two specific question which you need to ask, and it's an and condition. So if answer to both these questions is yes and yes, then under the proposed amendment to IAS 37, this test or the new test number 2, transfer test, is also met. Also bear in mind, there is a very important distinction and clarification which have been given by the amended standard, which is listed here at the bottom. Now, the clarification or the proposed amendment to IAS 37 clarifies that a transfer of economic resource, which we are talking about here, a transfer of economic resource is not an exchange of economic resource. So, transfer is not equal to exchange of economic resource. So, transfer of economic resource is not equal to exchange of economic resource. What does it mean? It simply means, let us say, if I have, for example, let us say I have entered into a contract, say an executory contract, wherein I intend to transfer some cash, and in lieu of that, I will receive some equipment or plant. Now, in this case, this is not a transfer of economic resource as contemplated under the amendment, because it is actually an exchange. You are parting away with cash or some other resource and getting other asset, PP&E, or a plant. Therefore, this will not be within the fold of the definition of transfer of economic resource. So that's why, just to reiterate, a transfer of economic resource, the example which I gave, you give cash and I get basically, the PP&E. That transfer of economic resource is not contemplated under the amended IAS 37 as exchange. Therefore, if this is if there is an exchange, then in that case, it will not fall within the definition of transfer of economic resources. However, if that is onerous, that's why it says, if the contract is onerous, then in that case, yes, it will come within the fold of transfer of economic resource. That's what it says. If the transfer is not onerous, it is outside the scope of this definition. However, if it is onerous, that means the benefit which you get is lesser than what you pay, then in that case, on an effective basis, you are transferring economic resources. So that's how you have to understand what is the meaning of transfer of economic resource as contemplated under the transfer test, and that transfer of economic resource has to be to another party, and that another party need not be identified. It could be an individual, some other party, or society at large. So therefore, it is also very, very important for you to understand that this criteria, if you see, it only says the obligation has a potential requiring transfer of economic resource. And that's what it says. The transfer requires you to assess merely the existence of such potential. The fact that because of the obligation which you have ascertained as part of the obligation test in step 1, whether that obligation has a potential, whether there merely exists a potential which will require you to transfer economic resource, and it may not be certain or even likely that the entity will eventually be required to transfer an economic resource. That means the probability of transfer of economic resource is not to be tested here. That will be tested as part of criteria 2 and 3. Which is there under the existing standard. That criteria is still remaining intact. So the probability of transfer of resources will be under criteria number 2 under the existing standard. So therefore, this transfer test only looks at merely the existence of the potential, not the probability of transfer. Probability of transfer will be covered under criteria 2 under the existing standard. That's very, very important for us to really understand and differentiate that this test only looks at mere existence of such potential of transfer of economic resources. Put differently, as I already explained to you, that this new test does not consider the probability of transfer of economic resource, which of course remains as part of criteria number 2, which we have seen. The second criteria under the existing framework of both IAS 37 and Ind AS 37 is, second criteria is outflow of economic resource is probable. That evaluation probability will continue to be under criteria 2. Okay, this is how you have to understand the transfer test as contemplated under the amended IAS 37. Now let us look at an example to explain this transfer of economic resource. So let's see an example here. Consider a scenario wherein a new law, let's say there is a new legislation. A new legislation requires an entity to make modification to its production process. And that modification will help reduce the GHG gas emissions. The greenhouse gas emissions will get reduced by modification to the production process, and that modification in production process is mandated by law, which is newly legislated. Now, what will require, because of the modification, what the entity is required to do? The modification would involve purchase of the modification will involve purchase of energy efficient machinery and purchase of electricity from renewable sources. So this modification will involve these two things. You need to buy certain energy efficient machinery, and you need to purchase energy from renewable sources. Say, for example, wind. You buy PP&E, which is energy efficient. And if you don't do it, because there's a law, the law requires you to do this, make this modification. But if you do not do this, that may lead to heavy penalties. You may be asked to pay penalties and fines. Now, in this case, if we need to evaluate the criteria too of transfer. Now, here there are two things. Because of the proposed modification to the production process, there are basically three things which you have. Either you will purchase the energy efficient PP&E, or you will buy the energy from renewable sources, and both of them. Both of them you will do. Failing which, you will be paying penalties. So if you look at the first one, when it comes to the obligation of the entity to purchase energy efficient machine and electricity from renewable sources, will you say that these two things meet the definition of the transfer test, and whether entity has here the requirement to transfer the economic resource? Because this evaluation has to be done in the context of what we have already looked at in the previous slide, wherein I mentioned that the standard is differentiating between exchange and transfer of economic resource. Now, in this case, in this particular case, for these two requirements under the proposed modification to the production process, transfer test is not met, because this is actually an exchange. Because as I already explained here, you are selling out economic resource, and in return, you are getting what? You are getting either the PP&E or the electricity, which is from the renewable sources. And therefore, in this case, if you look at these obligations, these two obligations, they represent an obligation to exchange economic resource. You give, you receive. And they are not an obligation to transfer an economic resource as contemplated under the transfer test. And therefore, these will not meet the test of the transfer test. But what about the penalties? If you look at on the right hand side, obligation to pay penalties. If you don't do it, if you do not do it, penalties are certainly possible. Because in this you are only assessing the potential, not the likelihood, potential of transfer of economic resource. Yes, there is a potential. Because of the new law, if you do not do this, there is a potential that you will have to pay penalties. Now, how likelihood it is that you will have to pay, that will be evaluated in the second criteria under the existing standard. Therefore, when it comes to penalties, transfer test is actually met, which is not met here. And as I said, because in this case, in case of penalties, the obligation to pay penalty or fine is an obligation which has the potential to require the entity to sell out cash if they don't do this. And therefore, in this case, entity will, when they make the payment of fines or the penalty, they will not receive anything in exchange. And therefore, this one is not an exchange transaction. It is basically a transfer of economic resource. If the entity were not to meet its obligation cast on the entity because of the new law. So that's how you have to look at these examples and evaluation. Now, whatever examples I've talked about today, they are all kind of leveraged from the proposed implementation guidance under the amended or the proposed amendment to IAS 37. Just to give that specific insights to you, that these are something which are taken or kind of adapted from those implementation guidance available in the standard itself. Now let us move to the three tests. So we have seen this test and we have seen this test. Now we move to look at the third test. Is a present obligation as a result of past event is something, let us see what we need to do. So the third new test is past event test. So we will be looking at this test. So as part of evaluating this test again, the amended standards require you to ask two questions. That Under the proposed amendment, an entity has a present obligation, which we are evaluating here, as a result of past event if the entity has obtained economic benefit or has taken action and hence will need to transfer or may need to transfer an economic resource. So, for example, let us say you are in a pollution in an industry like chemical industry, which is creating a lot of pollution, say air pollution. Now, let us say there is a law which requires you to fit smoke filters. And if you don't do it, you will be required to pay certain penalties. Now, the question here is we are trying to find out whether the present obligation is as a result of past event or not in this particular scenario. Now, the moment the entity is continuing with the production, then in that case, the entity has taken action to continue making production, and because there is a law which tells you that if there is the pollution on account of your production facility, you have to do fitment of smoke filters. If not, then you will be obliged to pay fines and penalties. So therefore, in this case, there is the fact that you have taken an action, and therefore you may need to transfer an economic resource if you do not meet the requirements of the law. I'll explain this with the help of an example as well. So if you see this, in fact, the example just come up. So consider a scenario wherein a new legislation requires an entity, there is a law which has come, which requires an entity to fit smoke filters in its factories if it produces smoke in its operations after June 2028. This is, just for the simplicity, I've given the date, okay? So that means what it says, if this is June 2028, if the law tells you that it will require the entity to fit smoke filters in its factories if you are producing subsequent to June 28, right? Non-compliance of this requirement will lead to heavy penalties. You may have to pay penalties. Now, you see what happens. Third point. The entity produces smoke in its operations but has not fitted smoke filters even after the cutoff date of 30th June. By 31st of December 28, the cutoff date was June 28. Even by December 2028, you have not complied with the requirement to fit the smoke filters, though you are making pollution. Now, in this case, do you say that there is a present obligation as a result of past event exist as of, let's say, December 28 or another scenario, December 27? Let us see both the scenarios. That prior to the cutoff date of the 30th June, let us say on 31st of December 27, prior to this cutoff date, let's say on this date, obviously past event condition is not met because your trigger is on account of the cutoff date of 30th of June if you continue to make production. So therefore, as of a prior date, which is 31st December 2017 in my example, past condition is not met. But because the trigger, the past event which requires you to make or oblige to meet your obligation is producing smoke after the cutoff of 30th June, which has not yet occurred as of this date. And therefore, in this case, as of 31st of December 2027, this test is not met. But on the contrary, as of 31st of December 2028, yes, the past event condition is met because the entity has taken action. You continue to make production. You are making production subsequent to June 2028. And even despite that, you are making, contributing to pollution. You have not fitted the smoke filters. You are 6 months down the line. And therefore, the event which creates your obligation has already happened. So in this case, the entity will have to fit smoke filters and may have to pay fines that would otherwise not be required to pay if it would have fitted the smoke filters. So in this case, for this period, this criteria is met, but for this period, the third criteria is not met. This is how you have to evaluate all the three tests under the new amended guidance under IAS 37. And as I mentioned, at some point in time, even the similar guidances, because India has converged to IFRS, at some point in time, they will also be expected to come under India's 37 framework as well. So with this is what I wanted to conclude and cover for this particular topic. As I already mentioned, just to recap, we have covered only this bit today. So we have these three areas yet to be covered. This is something, these three is something which I'll cover in subsequent videos, because I just want to ensure that the length of the video is not too long. So therefore, series will continue even in the subsequent periods as well. And we will see whether we are able to address it in one video or maybe more than one video is needed. Okay, I'll see that. Based on that, we will continue this series. This is what I wanted to cover for this particular video. I take a pause at this point in time, and I'm really happy that a lot of people have now basically coming to my channel and looking at and listening to the deliberations. This is the link of my YouTube channel. Please feel free to subscribe to the channel, comment, share, put anything which let's say any additional topic you want me to cover. I will try my best to have subsequent videos on those topics. In fact, if you look at these two areas which have been added to the list of topics, now accounting for cryptocurrencies and various topics related to India's 116 and IFRS 16, they all have come up because of the users of the YouTube channel, and in fact other professional members. They have reached out to me in various capacities and they have requested, why don't we have videos around these topics also. So of course the other ones were already there. These are the ones of late I have added on the channel. Okay, so I'll take a pause. Thank you very much for all your support. Please feel free, subscribe. You can circulate it to anyone who is in need of these kind of content. That will really help the channel and personally to myself. Thank you, and let us remain engaged. We will continue this series. Thank you and bye for now.